Okay, so on Wednesday at 8:30 Eastern Time, the next CPI reading is set for release. Right, this is going to be incredibly high impact for a number of reasons I'm going to get into in this video. And I just wanted to make this video because there's something that I've seen that perhaps you're not aware of that maybe you should be aware of. So stay tuned. I'm going to explain what commodities are doing and why this weighs on the CPI, and I'm going to explain the Fed speak we've had the last few weeks and why this data point could cause another correction that we saw at the end of July last year. Alright, so this data point we have coming up is incredibly important. Please watch this video. You might learn something that could save you from losing a lot of money. So a quick history lesson in the US stock market. At the end of July last year, we had a 10% correction in the overall index. Okay, that was between, you can see on the chart behind me here, between July and November, the stock market dropped 10%, and then it went into the everything rally that we saw starting the end of October last year. Okay, why? There's very good reason for it. The stock market doesn't just go down and up randomly. There's reasons why investors are buying and selling the stock market. What happened at the end of July last year was that we saw the progress on CPI inflation stall. All right, that's this green line you can see behind me here. So you can see the July reading ticked up from 3%. It was coming down significantly. And since that June reading, CPI, headline CPI that is, has failed to get below 3%. And in fact, it even ticked up. So that's the green line I want you to look at right now. We'll come back to the blue line in a second. That's why the stock market dropped 10% last year. It's because progress on inflation stalled, and we had a bit of a pivot from the Fed that was kind of thinking about recession and cutting rates to stir the economy, which would have been good news for the stock market. In fact, it said, no, growth is actually incredibly strong. They boosted their GDP estimates by double, and they said, no, interest rates are going to stay high for quite a long time with their quarterly SEPs. If you don't know what any of that means, subscribe to the channel and learn, because if you're trying to trade without understanding any of those acronyms or words, you're trying to sail without understanding the wind. So the Fed pivoted, inflation got sticky, and the stock market hated it. All right, the reason I'm telling you all of this in this video, stay with me. The reason I'm telling you all of this is because we are starting to see a similar pattern now. Right, you can see this little bump in the stock rally we've seen since November. Took a bit of a hit last week. I'd explained why in the weekly debrief on this channel. If you like the sound of this, subscribe. The reason why the stock market's taken a bit of a dip is because there's certain Fed speakers coming out saying things like this and this and this, and the stock market's noticing that headline CPI is failing to come down, right? As you can see in the chart behind me, it's failing to come down. We're seeing progress on core inflation, we're seeing progress on PCE inflation, but these headline CPI figures just are not getting back below 3%. And I'm making this video today to kind of show you something that I found quite alarming. This is a chart, green line, headline CPI, blue line, oil prices. And you can see, yes, of course, it's not a direct correlation, nor is it a direct causation. But it does weigh heavily on the CPI with energy and travel, right? Energy and travel costs weigh on the CPI, and the oil prices are immensely volatile. Right now, you can see oil is trending back up to where it was last time there was a 10% stock market correction. Right, so these oil prices are going to be pushing the CPI higher, which is going to cause more hawkish Fed speak, which is going to weigh on the stock market. Okay? And what I want to draw your attention to with this video is look at the way oil is trending. Okay, this is important for commodity markets, it's important for stock markets because it's important for monetary policy. So what we have coming up on Wednesday is the next CPI reading, and if it comes in high, it's really going to push market sentiment away from multiple rate cuts this year to less or perhaps even none coming up, which is going to weigh on stock market performance. You know, I'm not saying, oh, a 10% correction's coming, because the data's yet to come out. I might be proved completely wrong. Maybe despite rising oil prices, the overall headline CPI does drop, but it's forecast to come in hot, and oil prices are climbing even higher going into the next reading as well. Okay, so bear this in mind. All right, so this inflation reading coming up on Wednesday is immensely important. Tune in for it. I'll be making a video on it. If you want to stay informed, subscribe. But if you want to have your finger on the pulse, tune in for the data release as it comes out, 8:30 Eastern Time this Wednesday.